guys, welcome back to the blog. As you know, last week I went up to Washington, D.C., that mecca of information. Jim Montrym here, your favorite mortgage broker instructor for both the 20-hour pre-license course and that 8-hour CE that you all love to do every year. All right. Like I said, last week I went up and I met with the folks at CSBS, Tim Doyle, Pete Marks, Rich Madison, the guys that I've dealt with. Had a good meeting with these guys. We talked over some of the issues that I think are facing the industry. They're very receptive. I appreciate that. Also, I went over to see Dan Brown, the chief attorney for the Consumer Financial Protection Bureau, in charge of the SAFE Act, and had a great discussion with him. And I'll give you more of that as it progresses. I think these guys are definitely interested in listening to what I have to say. Again, we're all trying to make the mortgage industry better. That's our goal. Okay. Now, for those of you that are new, that have never watched me before, remember how this works, guys. I will be teaching this about 3 to 5, 6, 7 minutes. At the end, I'll ask you a quiz question. If you email me back the answer, I enter you in a drawing for a free continuing ed class. And like I said, guys, the response has been absolutely amazing. I can't believe how many people are responding back to me and entering. So I thank you guys. Please send me around. It's the best compliment you can give me, and maybe you'll pick up some free CE. Okay, very good. Now, a couple of topics I want to talk about today. All right, a couple of bills right now that are in Congress. These haven't passed, but these are things that we should be aware of as mortgage brokers because they could affect us. Number one, the first thing is, remember when they passed the QM, Qualified Mortgage Rule, the maximum broker fee, lender fee, 3%. Now, the first change that CFPB realized was under $100,000, we needed to raise those fees up to about 8% if you get to a very small loan, because nobody was going to touch those types of loans. It's almost darn near impossible for someone to get a loan in a lower house price area. Well, something else that they're now considering, here it is, on manufactured housing. They're considering a bill to say that manufactured housing under $75,000 would be considered personal property, i.e. not real estate, okay? So therefore, it would not fall under the auspicity of mortgage loan origination licensing, okay? So it's a bill because, again, it's hard to get lenders, number one, to lend on that type of housing to begin with. And then double whammy when the prices are below $75,000, frankly, it's just 2 strikes against the borrower being able to obtain a loan. So they're contemplating those loans would not be subject to Dodd-Frank. They would not be subject to the high cost provisions, okay? Remember, high cost is when you're doing a loan under 417, if the APR is 1.5% above the current APOR, average prime offered rate, okay? And again, it's very simple. These loans are not profitable. No one wants to do them. And you're really, by having these rules, Dodd-Frank, hurting the consumer. So again, manufactured housing under $75,000. That's the proposal. Okay, another thing in the U.S. legislature and Congress they're looking at right now, a bad thing that I want to point out to you. Again, don't like to bring bad news into the mortgage game, guys. We got a little mojo going these days. Things are moving in a positive direction, so I don't want to be Jim the guy that brings you down, but hey, you got to know the news. Okay, guys, Fannie and Freddie Mac, how they operate. Obviously, we lenders do loans, and then they're sold to Fannie Mae. And Fannie Mae, for those of you who aren't really aware of this, yeah, they buy these loans. But in fact, what Fannie Mae really does, guys, they're in the insurance business. They basically tell these lenders, hey, we make these loans, we package them, we sell them to Wall Street. Wall Street securitizes them into these mortgage-backed securities and sells them to investors. And Fannie Mae and Freddie Mac's purpose is to act as a guarantor, as an insurer. So if you buy those securities and later on they turn out to be not what you got, and that's the reason why you and I bailed Fannie and Freddie out to $185 billion in the bailout, Fannie and Freddie makes the investors whole. Now, one of the things that our current administration in Washington, what a shock, what's called a G fee, guarantee fee, okay, which is, again, a small percentage charged to lenders, for the purpose of insuring those loans, which is well and fine and dandy. Now, our current president has decided, administration, that we're going to raise the G fees, okay? In other words, raise them above what's required. Why? General revenue. We need more money. Our government can't function. We're only $18 trillion in debt. So really what it boils down to, guys, is a tax on home ownership, in my opinion. That's a bad thing. So again, the two senators, Mike Carpo, he's out of Idaho, and Senator Warren, he's out of Virginia. They're fighting this for us, okay? So those are good guys. Carpo and Warren, in my opinion, are the guys that are standing up saying, no, this is not a tax for general revenue for the government, okay? This is an insurance premium for home ownership of homes. So we want to fight that bill and be on the lookout for that and be on guard. That's why, guys, you should join things like the Mortgage Bankers Association. These are the groups that fight these issues and keep them happening. A Mortgage Bankers Brokers Association. Get involved with your trade groups, guys. It's really a good thing for your career in the long run. Thank you. Guys, third section of the blog for today, a real quick one. CFPB, Consumer Financial Protection Bureau, guys. I got some news for you guys. You want to be on the lookout for this. They have decided, starting in June of 2015, to start publishing narrative complaints from consumers. What does a narrative complaint mean? The whole thing. Not just a little snippet, you know, Joe Blow did this bad thing, but literally the whole thing that was written by the consumer about the broker, okay? And again, the problem with this, guys, myself, I think it's kind of like the Scarlet Letter. Somebody could report you to the CFPB. They're going to publish that whole comment on their website, and really you don't get your chance to kind of, in my opinion, kind of have your day in court. So this is something they're definitely going to do, guys. It's not a matter of they've thought about it for a while. They weren't going to do it, but now they have decided starting June 15 of this year that they're going to be publishing the whole complaint. So, you know, I've been preaching this to you guys many times in my classes. You're not as funny as you used to be, okay? And again, this is another example of it. You screw up, guys, bad enough. You get this published against you. It's kind of like floating out there and it doesn't go away. So, you know, again, guys, do it right. Do this business right. Come on. You're not as funny as you used to be, but I'm still funny. Okay, guys, here's an opportunity, I think, potentially for you, all right? They say, guys, in the next year, 2, maybe about 3 years, they estimate about $158 billion worth of home equity line of credits are going to come up for maturity. That represents basically about 3.3 million mortgages. Now remember how home equity lines work, guys. Basically, you can have it for about 10 years. And once the 10th year comes along, most of the lenders reset the loan terms and turn that into a true second mortgage on a property. In other words, they want to get paid off. Okay, so there's the good news. Now a little bad news. Of those 3.3 million mortgages, home equity lines, they say about 1.8 million of them are underwater. So those folks probably are not going to be able to be helped. But that does represent a lot of people who have positive equity. Obviously, homes have went up in the last few years. So I think it represents an opportunity for some of you guys to contact these people, or if they contact you, say maybe it's time to pay off that home equity line of credit, maybe even refinance the home, the first mortgage on the property. So I think there is some potential there because we all know after 08, home equity lines of credit were pretty much a dinosaur. And now they're finally starting to come back. So be on the lookout for that. Again, a lot of these home equity lines of credit, people are going to be questioning you about that because they are going to reset, okay, to a higher interest rate. All right, now let's finally finish up today with the blog question, the free Continued. Oh, yes, Jim, give it to me, baby. Let's stay with the sports theme. Okay, here's my question for you. Answer this question honestly. Jameis Winston, the new quarterback of the Tampa Bay Buccaneers, will he have his first touchdown pass or his first brush with the law? I have my thoughts. I want to know your thoughts. So again, touchdown pass or brush with the law? Okay, guys, I will see you in about 2 weeks. I wish you all the best, and I will talk to you when we have our next class, our next blog. Thank you very much. Have a good day. Bye-bye now.